Welcome back. I'm Pratap here. Today is the 28th April 2024. In this video, let us analyze Bank Nifty with the help of top-down analysis by using NeoStock software supply demand zone chain, so that we can identify Bank Nifty support and resistance levels based on the high liquidity zones at the lower time frames. So let's start our analysis for monthly time frame. Even before that, a small announcement. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons can be accessible from our NeoStock YouTube channel. There you click on this community section. There I have provided the link to supply demand zone price action course playlist. There you have all the videos, training videos. Just click the link. You will get into the playlist supply demand zone price action course. And then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to this playlist in this YouTube video description. I also provided the link to our Telegram channel in this YouTube video description. Please join in the channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into the analysis discussion. So let's start our analysis from Bank Nifty monthly time frame. So as per the supply demand zone chain, we have a demand zone. The legging date is 1st August 23. After that we have 3 base candles. See, this is the 1st August 23. This is the base candle. These are the 3, and we have a leg out candle, a rally candle. So this is the drop base rally. So let us draw this monthly demand zone. I am changing the color to monthly demand zone. Also let me add a text here. So this is a monthly demand zone. Okay, and this monthly demand zone is having a monthly EMA confluence, and overextension is also not there, but there is a possibility that from this EMA there is a overextension. There is a possibility prices may get into this. Comparing to this zone, the overextension is not there, but compare it to the location where the monthly EMA is there, still you have some overextension. Suppose if any unexpected things might happen in the coming week, probably Nifty, there are chances that it will come up to this area. But there are lower time frame zones, high liquidity zones, that may not allow the prices to go up to this area. That possibility is there. That's why we are doing this top-down analysis. And this monthly demand zone is a all-time high demand zone. And also we should understand at present monthly trend is an uptrend. See the monthly trend. Whichever the zone I am generating, that will be displayed as LTF. So we can assume here LTF is monthly. It is having uptrend. Now let us generate a weekly chain. So I am selecting the weekly time frame and let me generate the chain. It may take some 8 to 10 seconds time to generate the report. Meanwhile, let me change the time frame here. Now we are into the weekly time frame. Okay, the chain is ready. And at present we have one supply zone, valid supply zone. The another one is already pierced. So let me draw this supply zone. And when this is the most recently created supply zone. On 1st April, after that one base candle. This is the weekly supply zone. 1st April, one base candle. We have a rally. We have a base candle. And we have a drop candle with a hidden body. If you add the hidden body, it is having a very good body. And moreover, it is a ERC candle, very big candle. This is the weekly supply zone. So let me add the text. Okay, fine. Now what about the demand zone? Here we have a rally, two base candles and a rally. Let us check. We have 11/3/2024, two base candles. So this is the one. 11th March 2024, after the two base candles. So, and it is a drop base rally, DBR. So let's draw this demand zone, weekly demand zone. So it's a normal weekly demand zone, right? Yeah, this is the normal demand zone. Below we have a high liquidity weekly demand zone. And look into this demand zone. Why it is so special? Because it is having weekly EMA confluence. So previously prices reached to this weekly area, and then see the huge rejection from this weekly EMA. And somewhere here we have lower time frame zones that pushed the prices up. And this weekly demand zone is having weekly EMA confluence. That is another interesting point you have to observe. Not only that, this weekly demand zone is also having a monthly confluence, monthly demand zone confluence. Let me repeat, a weekly demand zone is having monthly demand zone confluence, that is zone confluence. Apart from weekly EMA confluence. That means this demand zone, why it is special? This is having EMA confluence and also it is having higher time frame zone confluence. And also it is low on the curve because it is having a confluence with the monthly zone. So this is the speciality of this weekly zone, and also weekly trend is also uptrend. See here, the weekly trend is uptrend because we have selected weekly time frame. This is weekly time frame. So definitely there could be strong order flow in this area because that is the reason why the prices, actually the zones we have fine tuned here, from there the prices moved up from the last analysis we did on this particular chart. Now let's move on to the daily time frame. So I am changing the time frame to daily, generating the chain. Let me change here also daily time frame. In the daily time frame, we have a high liquidity supply zone. So here we have a high liquidity supply zone. So when is the leg in? 5/4/2024. After that 4 base candles. So this is the one, 5/4. After that 1, 2, 3, 4 base candles, and you have a hidden body drop candle. So let me add the daily supply zone, the color to the daily supply zone. Okay, and also let me add the text. This is a daily high liquidity supply zone. I don't know how many of you remember. Last week, last week means this Thursday, if I am not wrong. I already published a video about this high liquidity, daily high liquidity supply zone. Exactly from the fine-tuned area, it picked up the orders and came down. In this candle, here we have a fine-tuned area up to here, up to this high of this candle. It picked up the orders. See the next candle again picked up the orders from the same fine-tuned area, but slightly pierced that fine-tuned 5-minute zone, and again it came down within this top buffer area. It is slightly pierced and again came down. It has given a multiple short trades from that particular zone. So this is that particular high liquidity supply zone what we analyzed earlier. Okay. Next, what about demand zone? The most recently daily demand zone, newly demand zone is created because zone strength is yet to establish. Probably last Thursday or Friday. 25th is Friday. Thursday. So here drop base rally. Yeah, drop base rally. This is the one. (23rd 4). This is the 23rd 4. 4 means April. 23rd April. The zone will be like this. And this is a demand zone, newly created daily demand zone, but it is not having any achievement so far. Zone achievement is not there because it is a newly created. Without zone achievement, we never know how strong this zone is going to be. But let us mark. This is an important zone. Why? Because in case if this zone is violated, this daily demand zone, trend will be changed. At present, it is in sideways trend, Bank Nifty, on daily time frame. The sideways will be changed to the downtrend. So this is a daily demand zone, but only positive factor for this particular daily demand zone is it is having daily EMA confluence. If there is near this area, that means at the near the distal line of this particular daily demand zone, if there are any lower time frame zones or high liquidity zones, probably again there are higher chances prices will be moved because EMA confluence is there. But this EMA confluence, does it really having importance? Think wisely. Whatever the concepts you learned about EMA, think about those concepts. Definitely I will ignore this EMA. The reason is EMA confluence should be used only in the trending market, not in the ranging market. At present, the Bank Nifty trend is sideways. In sideways, EMA confluence is not having any significance. So that is the point. Maybe it may hold any zones here, it may hold for small period, after that they may violate. But we should be careful. This is a very critical daily demand zone. The reason is if this daily demand zone is violated, Bank Nifty daily trend will be changed to downtrend. Okay, but below that we have a high liquidity zone. We have to draw that. And we have very far away. This is 1711, 2911. No, and below that we have one more daily demand zone already tested once. Let us draw the zone. That is a 26.3. This is the one. This is the leg candle. Why this is the leg candle? You just add the hidden body. If you add the hidden body, this will be a drop candle. See, that is the beauty. Many people, what they think, this is a base candle, right? But actually see here, this is a drop candle, drop base rally. Let us see what is our software is telling about this zone. See here, this is a DBR, drop base rally. So because of the hidden body you are going to add. So because it is a drop base rally, the lower of even legging also you need to consider. That way you will get a zone like this. This is another demand zone. So this is a daily demand zone. And moreover, this zone is tested more deep inside. If this demand zone is violated, what happens? After that, prices sharply it will go down, because the daily trend is changed to downtrend, and another moreover, that below the demand zone is also already tested more deep inside. There are higher chances this also might be violated. Probably below this, if there are any traps within this weekly zone, only those traps can push the prices up. That one possibility. Or another possibility, this weekly demand zone also violated, and weekly trend will be changed to sideways. By the time daily trend will be in downtrend. That is one possibility is there. That's why this daily demand zone, the newly created daily demand zone, is very, very critical. So very interesting here, Bank Nifty. So next week is going to be a very interesting week, just to observe whatever the supply demand zone concepts you have learned. And traders' point of view, they should be very carefully do their analysis on day by day. Okay, this is about daily demand zone. In case if this zone is violated, in case in next week, let us assume sharply it is came down, and even if this daily zone is violated, at the time again I will make another video. Otherwise, until this time, let us assume this analysis holds good for the next week. So that's why I am not drawing any zones below this. So this is about daily time frame. Now let's move on to 125 minutes time frame. Let us check any 125 minutes interesting zones are available. I'll concentrate more on 75, but 125, why I'm looking any high liquidity zones. Yeah, continuously high liquidity zones are there. Very interesting. We have a high liquidity supply zone, and immediately we have high liquidity to demand zones are there. Excellent. Okay, let us draw this supply zone first. So when is the leg-in? 12-4, 9-15. Two base candles. Yeah, 12-4, 9-15, two base candles, and then with a hidden body drop candle. This is a high liquidity 75-minute zone, and this zone is part of daily high liquidity zone. So that means from this 125-minute zone it picked up the orders and came down. This is 125 minutes high liquidity supply zone, but the problem is if I don't change the color, that value will be deleted. So 125 minutes supply zone. Now let me add the text. Okay. So we have a weekly zone. Inside a weekly zone, we have a daily high liquidity zone. Inside we have 125 minutes high liquidity supply zone. And then we have two high liquidity demand zones are there. They are already tested. But they support multi-testing if there are more order flows inside. So when is the first one? 27.3, 9.15. Two base candles. So this is the one. We have a rally, we have two base candles and a rally. Rally base rally. But this is pierced zone, right? Is it pierced? Yeah, it is pierced. So pierced zone we don't care. Let us leave this. Why it is pierced? Because below this we have a traps might be there, or there might be high liquidity zone below this. So what is the next one? We have one more high liquidity. This is a valid one, not pierced. This is on 25.1, 9.15 and one base candle. 25.1, 9.15. So below this weekly zone. This is November, this is January. Somewhere here we have a 25.1, 9.15, one base candle. This is the high liquidity demand zone. See, earlier it picked up the orders from this zone. See the entire move, a very big move. How much Bank Nifty has given? One big advantage of Bank Nifty is it is always very good for swing traders. Okay, this is the 125 minutes high liquidity demand zone. Let us don't expect prices will come up to this area during this coming week. Probably the price action will be within this area. Let us assume. But if any changes, if this weekly zone is violated, probably it may get support from here. And somewhere here some daily zone also might be there. Okay, now let's go back and generate 75 minute zones. And here also I am changing the time frame 75. Okay, it is ready. At present 75 minutes we have only two zones and both are pierced zones. But the zone that is not pierced is recently created 10.4, 9.15, 4 base candles, 12.4, 9.15. This is the 12th, 10.4, 9.15. So this is the ERC candle, 10.4, 9.15. 1, 2, 3, 4 base candles. And again you give a drop candle. This is a drop candle at the hidden body. See, many people, definitely, those who are not aware of these hidden bodies, hidden zones concept, they never think this is a zone. But sometimes institutions create such kind of zone, they keep a lot of order flow in this area. So this is a very critical zone. Even if you add the hidden body here, rally, we have 1, 2, 3, 4 base candles. Again you add the hidden body, drop candle. See here RBD, rally base drop. 4 base candles are there. Oh my god, again color. So this is 125 minutes supply zone. I need to add the text again. So this is the 75 minutes supply zone. We have one more supply zone, but it is having a rejection from this zone. Already tested, but that kind of test is a rejection. So let us look into this, some interesting. 26/4/915, two base candles. 26/4 means Friday. 26/4/915, two base candles. So this is the one. What is the high of this candle? 4850.885. This one 4850.880. So some strong order flow is here in this, at this distal line. Maybe somewhere some high liquidity zone is there. Probably that could be the reason. We will check. And this is the 75 minutes supply zone. And from here it picked up the orders and then came down and again moved up. First you see the push from here. From here to here prices went and finally it came closed here. So in this demand zone some order flow is there somewhere here. That's why there is a push. There is a big rejection from here. Here also there is a rejection. So that we will understand once we get into lower time frame. What is the reason behind both these rejections, upper side as well as the lower side. So this is about supply zone. Now we have a demand zone. High liquidity zone is already here. Already tested 2 times. This is the immediately when it is created on 25th, Thursday, 25th, 9:15, after the 2 base candles. (25th) 9:15. We have a rally. We have 2 base candles. So this is not pierced. It's not pierced. Prices came very close to this distal line. What is the low of this candle? 480.87, and low of this candle 480.88.25. Just 1 point. That means there is a strong order flow here. See, here also there is a huge rejection. Here also there is a huge rejection. Just below there is a strong order flow here. That we will understand only once we get into the lower time frame, that is 5 minutes time frames. Who will be the reason behind giving such a strong push each time? So institutions kept a very strong order flow here. We have 2 rejections from here. The same, just only 1 rupee, only 1 point difference. Okay, rally, base rally. This is a high liquidity zone. (75 minutes demand zone). And this 75 minutes supply zone is a normal supply zone, not high liquidity. Both are very close, but prices reached up to the distal line, probably just below. There could be some zone should be there. That we will see. And we have one more high liquidity zone which is valid. This is on 26th March 9:15. After that 4 base candles. 26th March. This is the one. So we have a drop candle, the hidden body, 4 base candles, rally with a gap. So inside this daily zone, we have a high liquidity 75-minute zone. So 75 minutes high liquidity demand zone. See how much push it has given. Why this zone was special earlier also, previously when I discussed also, I told you guys, I don't know how many of you remembered. This 75 minutes is having daily EMA confluence. This daily is having weekly EMA confluence. This weekly is having monthly EMA confluence. So definitely in the lower time frames, you have 15 minutes and 5 minute zones will be there here. From the fine-tuned area, it gave a very big push. How powerful they are. Zone confluence. Those who have taken a swing trades, definitely they would have got a very good profit here. April it gave a trade and it reached 26th April. So it's a perfect, swing trade. It is a perfect swing trade. Okay, fine. Now let's move on to the next time frame. We have below one more is also there, high liquidity. Let us stop our analysis up to here. If these levels are broken, then we will look into these zones. So now we are moving to 25. 25 onwards, we will see only high liquidity zones, because we will give more importance to 15 minutes. Why I am looking 25? Just to find there are any high liquidity zones. Oh, possible LTF. So one of these zones are having a strong, will be having a fourth one is a high liquidity demand zone. 19.4, 14.15. So 25 minutes time frame. This is a low priority zone, but it is having its own counter trend trade setup related. 19.4, 14.15, 2 base candles. Nineteen 450. Oh, 19.4, 14.15. After that, 2 base candles. This is the drop and 2 base candles. So this is a 25 minutes low priority high liquidity demand zone. And we have one more rally, base rally, 19.4, 12.35. Yeah, both are LOTL zones. So here we have a real order flow. They are having some importance. We need to combine both these zones and you need to plan your trades next time, but they are having some significance. And what is the next one? Below that again there is one more high liquidity, that is 27.3, 13.50. But this is already pierced. Okay, let us ignore this. Let us stick up to this area. Let us focus more on 15 minutes. So I am changing the time frame to 15 minutes time frame, generating the chain, and here also I am changing the time frame. See here also, excellent. 25 and 15 are working similarly. Which one? Let us look into this. This is 19.4, 12.45, 3 base candles. $12.45, these 3 base candles. Sorry. So what I do, time being, let me say this is a 25 minutes or 15 minutes. It is supporting both. And we have high liquidity demand zones, 2 demand zones, and also one high liquidity supply zone is also there. First let me finish these 2, the 3rd and 4th. See, the 3rd one is already tested 3 times, 3 rejections also. When it is 25th April 9:30, after that one base candle. 25th April. So this is the reason behind these rejections. We got it now. This was the main reason behind pushing these prices from here. See, these rejections actually they are coming from this 15-minute zone. So this is the actual reason behind this entire 75 minutes high liquidity demand zone. See, this is 15 minutes and 75 minutes, both are high liquidity demand zones. They are having the confluence, but see the trick, how cleverly institutions created this, the zone confluence. The zone confluence is at the distal line of the 75 minutes high liquidity demand zone. At some point, it looks like this 75 minutes high liquidity demand zone will be violated. But the order flow is picking from 15 minutes high liquidity demand zone. From this is the area, it is picking the orders. This is the main reason. That's why earlier, remember, I guessed exactly same places they are picking the orders. Definitely there will be a lower time frame zone will be there. So this is the lower time frame zone. But definitely inside we might be having a fine-tuned 5-minute zone might be there. That we will see once we get into 5 minutes time frame. So rally, base, rally. Excellent. Rally, base, rally. Already 3 times it's supported. Okay, below that there is one more high liquidity zone already tested once. When it is a 15 hours. 19th April, 15 hours, one base candle. April, 15 hours. This is the one. See, there is a rally candle with hidden body. All this, the entire hidden body is a rally. After that, it went further up and came down. That is the way you need to think. This is a high liquidity zone. For 25 minutes, it is a low priority. But for us, it is a... So that's why what I do, I will remove this 25 minutes because this is a high liquidity zone. S_DZ. See, this is the way we have to do analysis for finding the real institutional order flows. Then only we will identify the right trades. So now we have identified 3 high liquidity areas. So this is the one area, this is the another area, and this is a 25 or 15 minutes low priority high liquidity zone. Is there anything else? Below there is one more high liquidity zone. This is the 26th March. One base candle, 15 hours. 26th March, 15. So let me zoom, we will get clarity. This is 26th March, 15. So this is the ERC candle, leg in, and we have a base candle. So this is the 15 minutes. High liquidity demand zone. And yesterday's training lesson, the lesson I released yesterday about the rejections. So this is one. Maybe this is not a this may not be the aggressive trade because it is inside the 75 minutes. 15 is there, but I'm telling you, see here, prices came very close to this zone and moving up. All these rejections are indicating in this 15 minutes high liquidity demand zone, there is a strong order flow. Next time when prices are entering into this zone, we should not miss this trade from this zone. Is any time came? Yeah, see here. Prices came, entered into the zone, see the strong order flow. It's not only look into the candle, after that you need to observe the price action. See, now the entire move from here to here. This is the reason. How much push it has given. 19th April, the prices entered into the zone. And today and here, 26th April, this is a perfect swing trade. And moreover, see the price action here. Before entering into the zone, we have seen multiple rejections from this zone. Maybe they could be small because it is 15 minutes level. If you get into 75 minutes or daily, you may see a big rejection from here. So these are all the price action clues you should always keep in your mind. Price action is rejections is a very powerful price action clue. But if you are understanding these concepts in a right way, it will give you a lot of profits in the future. But you should not use this concept in a wrong way. Once your experience grows, your thinking level also will be developed. At the time, these price action clues you will understand much better way. This is only learning phase. But wherever the examples are there, I am showing you. At least from my examples, you will learn in a much better way. See how much big move it has given. The big move it has given not only just because of these rejections. Rejections is one point we should consider. The other things are 15-minute zone is a fine-tuned zone. Inside 75 minutes high liquidity demand zone. Inside daily demand zone. All these are all, 75 is high liquidity, 15 is high liquidity. All these concepts helped for this big push from here. Prices came. Why prices entered into more deep? See the supply here before that is a very strong supply. But this strong supply finally it is able to hold. It consumed all the supply. Finally there is no more supply. Now demand is how it is, demand is dominated. This entire supply has been consumed by this 15-minute zone. Of course inside you will be having a fine-tuned 5-minute zone. Swing traders should always look for such kind of trades. Don't forget, this everything is started from the weekly zone. Okay, now this is good enough for us to stop for 15 minutes. Now let us get into the final time frame, 5-minute zone. Changing the time frame to 5 minutes. Let me generate the chain. Meanwhile, here also let me change the time frame. Okay, the chain is ready. And here we have supply zones are there, 4 supply zones. Out of these 4, we have 2 good supply zones. This is anyway high liquidity. See, this supply zone is also 2 tests and 3 rejections from this zone. Maybe who knows, this also could be a high liquidity area. Maybe software might not have recognized it, yet to recognize this one, we don't know. Or may not be high liquidity. But what is attracting us? All these rejections. Maybe next time it might be violated also. Who knows, that is also possible. Anyway, we have a high liquidity zone, fresh zone. When it was created on 12th April 11:55. Is it 12th April? Yeah. April. Yeah, this is the one. 12th April 11:55. After that, 3 base candles. Yeah, 3 base candles. Rally base drop. Yeah, rally, 3 base candles drop. Prices haven't entered into this zone. So this is a 5 minutes high liquidity zone. So 5 minutes high liquidity supply zone. There is one more supply zone, tested multiple times. Just curiosity, let me draw this. Where exactly? This is also 12:04 at 9:20 candle. So that means somewhere here. This is the one, 920 candle. 12 for 920, after that 3 base candles. So this is a rally candle, maybe medium size rally. Among medium size, this is the smallest one. These are also medium size because of all these wicks. Maybe the body is less than 50%. This is one more candle. All these 3 candles it considered. But if you draw this zone again having confluence with this 5-minute zone. Very interesting. We have a zone confluence. This 5 minutes high liquidity supply zone and this one, both are having confluence. See, because of those zone confluence, you can also consider this is also a high liquidity area because of LOTL scenarios. See, in LOTL, one zone is high liquidity. Definitely we can consider the other one is also high liquidity because there is a confluence on the same time frame. Good. That means your entry is here, but your stop loss is here on the top of that. This is the entry and this is the stop loss. So only these are the 2 high supply zones. We have 2 more supply zones are there, normal supply zones. You please draw them on your charts. Sometimes they might be helpful to you for your intraday trading. These 2 supply zones, 3rd and 4th. I am not drawing because my primary focus is not about your trades. Primary focus is about support and resistance levels. There we get very good trades. In between you will get trades, no doubt in that. But when prices are reaching support and resistance, there could be at least more assurance will be there, more probability will be there. See here, this is one demand zone is here. Several tests, keep on testing here. When it is created on 25th, at 25th, 1050, 2 base candles. 25th April, 1050, 2 base candles. From here. Yeah, this is the one. See, already we discussed about this, why it is giving again and again the trades. So within this we have a fine-tuned area. We have 2 base candles, but I am drawing the second one only. Because the real order flow is from here. This is the 5 minutes HLQ demand zone. See here again drop base rally it is created. Drop, 2 base candles and a rally from the same fine-tuned area. That means again next time also there is a chance that prices come here again, pick up the orders and again it will go. See, the same area institutions are creating new zones. Actually, this is the main reason behind this. Here there is one more drop, 2 base candles and a rally. The 6th one is also high liquidity. 25th, 940, 3 base candles. This is the one, same one. We have a drop, 1, 2, 3. This is the one they considered as a rally. That means the same entire 15-minute zone will be considered as a 5-minute zone also, but what I do, this you can consider as a rally, no issues. Why software is considered as a leg candle is maybe slightly this is not having a expected length range, but for us a human point of view, okay, I can draw a zone like this. This is the one. So what I can do, I can delete this one, the one above 5 minutes high liquidity demand zone. This one I can delete because this is also part of both are LOTL zones. But this is the one actually picking the orders from here. This is the 15-minute zone. Let me change the color thickness. This 15-minute zone. Let me give. Now you will be having clarity. So we have a 15-minute zone. Within 15, you have a 5-minute zone. From this 5-minute zone, the orders are picking up. This is the entire thing is 75-minute zone. 75 minutes high liquidity zone. The 75 minutes high liquidity zone, we have 15 minutes high liquidity zone. 15 minutes high liquidity zone, again having 5 minutes high liquidity zone. From this 5 minutes high liquidity zone, see here, first time it picked up the orders, it gave a move. Second time again picked up the orders, again see the big move. And the last Friday, third time again it picked up the orders from here and see the move. Maybe if I would have generated this report on when it is on Thursday, Friday you would have captured this move. Anyway, these moves you can't capture because during the live trading it happened Friday. You may not be knowing these are all the high liquidity zones during the live trading because our software is not at present didn't have access to live data. It is having access to end of the day data after market hours. So that's why we may not be in a position to live market, in a position to tell these are all the high liquidity zones. See the power of the high liquidity zones. So this is the 5 minutes and below in case if this is violated. See, any of these high liquidity zones has to be violated at some point of time. We never know. But can we take a trade here? Yes, you can take. The reason is already one more zone is created. Drop, 2 base candles and rally from the same area. Again, once prices comes into this area, here probably somewhere here, again you can take a trade. Why earlier I appreciated institutions, maybe some 15 minutes or 20 minutes before I appreciated, I don't know how many of you observed, when I was discussing about this 15 minutes trade, 15 minutes HLQ zone. Because institutions created that 15-minute zone at the distal line of this 75 minutes high liquidity demand zone. Nobody will expect that, right? Why they are doing at some point of time this 75 minutes distal line will be, it will be pierced. Why I am saying pierced? Prices may go a little below and again it will move up. At the time stop loss will eat and many people will exit. Institutions capture all your stop loss trades. So this is the real beauty of this 75 minutes high liquidity demand zone. And now below this any high liquidity zones are here. We have a low priority high liquidity zone and 26 for 15 hours. This is a 25 or 26 4. This is 26.4, 15. 15.5. Yeah, 15.5. And one base candle. This is one base candle and a rally follow through candles. 15.15. 15.15. See again, that is what? This is again a low priority high liquidity zone. Which is part of this 15 minutes high liquidity zone. So again, that means institutions added a strong order flow. Anyway, we are referring, this is the main source. Let us forget about newly created zones because they are all LOTL zones as part of this. So one point is clear for us is institutions already set a good order flow in this area. So it may give us one more trade option. Suppose if tomorrow market supply is very strong and with a gap down it is opened below this, that is a different story. The prices opened and enter into this zone, probably it will pick up the orders and it will go up. And the 13th is a high liquidity demand zone when it is 19.4, 15.5 again, 19.4, 15.5, 4 base candles. So when is 19.4? Here, this is the fine-tuned zone. Inside this, 15 minutes high liquidity. So anyway, this is a fine-tuned zone. This fine-tuned zone is also a high liquidity zone. So remember the 15-minute zone and 5-minute zones. Let me reduce the color thickness of the 15-minute zone. You will get clarity. Now you have clarity. So this is a good area again. Because next time in case if this zone is violated and came down. But this daily demand zone is violated, right? It's not violated. Maybe I have wrongly selected this. Until here I should have drawn this. Okay. And below there is one more high liquidity. We'll stop with this. This is 19.4, 13.25, 3 base candles. $13.25. This is the one. So inside that low priority, high liquidity, we have a high priority 5-minute zones. Remember, all these zones are part of this weekly demand zone. The point you should understand, institutions are like they are keeping all these order flows inside the weekly zone. That means weeklies, they don't want to break this week, they don't want to allow bears to break this weekly zone. That's why they have created so many high liquidity zones. Because weekly zone is violated, weekly trend will be changed to downtrend. Unless something wrong happens to the overall market, otherwise institutions, they don't want. So these are the zones. At least you can depend forever this coming week trade. The first support is within this area. Let me draw the info line. This is the 75 minutes. Probably we can expect price movement within these areas. So almost 456 points move will be there from here. Maybe in our next Monday's trade. You can expect this range in Monday's trading. Maybe if possible, today's also may be supported within this. If one of these levels are broken, the next will be from here to, from this zone. If that is violated, the next will be from here to here. This will be the next range. For your coming week, maybe Bank Nifty may move initially from within this range. If one of these levels are broken, Bank Nifty may move within this range. This is how you can understand. So based on that, you need to plan your trades. So this is our conclusion after doing this top-down analysis. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.